You heard it. Open innovation exists, it's possible, and it's working. So, we've talked about a lot of big words and expressions this afternoon, and we are going to continue with that, with the biggest of all, which is, nobody's read the program, which is, come on, Paco, it's not sex. Oh, I thought, N26. I was talking general expressions like hypergrowth. Yes, N26 is big, but hypergrowth. Okay, sex as well is, anyway, let's leave it there. Hypergrowth we're going to talk about, and Arthur Bob Johansen notes that hypergrowth is combined of 4 things. He calls them VUCA. You know, volatility, uncertainty, complexity, and ambiguity. Is this correct? The ones with a hypergrowth experience? It's a complete new world. Even for those who have been there before, this stage of business is always a new dimension. And it changes every time. Okay, so we have an expert to talk to us about this, as already been told by a clever audience, the person that has actually read the program. Well, you all know why you're here. We have 2 fantastic experts. The first one is Valentin Stalf. He's the CEO of N26. He's a German mobile bank, which he co-founded in 2013 with his dear friend, Maximilian Tayenthal, who was here last year. Since the initial product launch in 2015, N26 has grown to include more than 3 million customers around 26 markets. The firm has raised more than $650 million. So what did I say? $650 million, sorry. I obviously didn't have my coffee this afternoon. I can see you laughing there. They've raised over $650 million from some of the world's most well-known investors. N26 now ranks amongst the top 10 most valuable fintech companies worldwide. And Valentin was just recently awarded European Manager of the Year by EVP. To facilitate this chat, we have a dear friend of South Summit. She's a fantastic moderator, but she mainly she's the, she's Tara Cemlyn-Jones, and she is from TCG Fintech Advisory, an expert on digital banks and fintechs in the UK and Europe. And you've probably seen her before because she comes here every year, which is lovely to see them both. Please, let's welcome Valentin and Tara. Now, Valentin and Tara, welcome. Sorry.
Hello, South Summit. I hope everyone is awake. I know that after lunch it always gets a little bit sleepy, but you've had 2 great talks. And I'm going to start with this wonderful opportunity to talk to Valentin, who I don't think really needs very much introduction because he's a bit of a pop star in the fintech community. He's also a very modest guy, so I'm going to start off by embarrassing him, which he wasn't expecting, and it's probably a bit unfair. But there is one thing that you need to clarify for me. So I have heard reports that every morning outside Klosterstrasse number 26, which is your headquarters in Berlin, that these long queues start forming. Now just tell me, are these people coming for jobs or your autograph? I hope it's jobs.
We only have people starting 2 times a month, so we've now really structured the process, but sometimes it really feels like there's a demonstration going on outside the office. But then in the end, last time I asked, I found out that it was all new starters.
All new starters. So not a single autograph?
No.
Oh, poor Valentin. I'm sure you'll get some.
I'm always sneaking into the pack.
Okay, you'll get some later today. But so, I mean, Elena introduced N26 as a newcomer, but this is a newcomer with already a very big presence, with a very large number of employees, over 1,300, is that right? And obviously a very big valuation as well. You know, 3.5 billion is not something to be ignored. And the theme today is leading a company in hypergrowth. Now, when I think hyperspeed, I don't know about you, but I think Millennium Falcon. I think Han Solo going through an asteroid field. So I'm thinking like customer numbers, funding, US, Brazil, 26 countries. Is that what it feels like?
So I mean, hypergrowth might feel different for different companies, and it's also a question of how you define it. But if I look back on over the last year, I think last year we started. So mid of last year, we were around 500 people, and we're going to end this year with about 1,500 people. So this is quite some change that you have to manage. But I'm a big believer in the cow theory. So you go in, you have a little bit of cows, and you come out stronger.
Cows. Okay, that's a Viennese concept, is it?
Yeah, maybe.
And so, I mean, in terms of defining hypergrowth, what would you say is the definition? We all want to know. I mean, the next question is going to be about hard knocks, because I think how many people in this room have been or would like to be in a startup? Okay, so quite a few people. So I think the issue here is that everyone starts and thinks, they look at Valentin and go, 3.5 billion, he had it easy, he didn't have to do anything, he just turned up one day, and then suddenly all this funding was available. I think the reality isn't quite so simple. Along the way, there've been sort of some tough moments. And I just wondered, before we take off into hypergrowth, whether you could give us a little bit of the early days and the tough bits.
So, I mean, it really started with founding the company on our living room couches. And the first thing, sounds easy, was to get internet. Yeah, we didn't have internet. And that was maybe the first tougher thing. Then I think before that even, quitting your job. You have a job, you earn decent money, and then saying, okay, you stop working, and then actually instead of earning money, you put the first 10 or 20,000 euros into your own company where you don't know if it's going to succeed. I still remember when we started the company, originally we started with a prepaid card for teenagers the first year. And we brought that product, we raised about 500,000 euros, and we brought that product to market into a test phase. And then we realized actually all the parents were using it instead of the kids. At that point in time, we actually said, okay, it makes sense to do a pivot and build a bank instead of a product that you could deliver to a bank. So we wanted to go for the bigger idea. What was the problem was, at that point in time, that was end of 2013, we had almost spent all the money we had. So we raised 500,000 euros, but by then, I think we had maybe a couple of 10,000s left on the account. We already at that time had a team of about 15 people. And that was a time where I can say I have really not slept for 3 weeks in a row. And that was really tough because I knew
10K, 15 people, and you're like, oh my God, what's
yeah,
going to happen
a couple of 10K, so maybe 50K or something. And that was really tough because we had 2 more investors. Everybody of the hundreds of investors we talked to dropped out. And that was really a moment of truth for the company. If we wouldn't have raised that Series A or seed round at that stage, we would have been bankrupt, and N26 would have ended there.
Okay, so that was the first big hurdle, which happens to a lot of companies, getting past the seed stage. And then after that, was plain sailing, or what happened after that?
So, founding a startup, independent of the size, and maybe from the outside, it looks completely different that we now valued at 3.5 billion, and we have investors from all around the world. But for me as a founder, it was always the same. It's always the same fight. Yeah, it's the numbers might be changing, and you have a bigger team that is supporting you. But in the end, for me, it never mattered if we raised as a company 200 or 300 million, or if we raised 500,000. So the fight is always the same. And you always think from funding round to funding round, and we just touched on it before. The problem as an entrepreneur is there's never moments, or for us at least, the moments of celebration are only a few, because as an entrepreneur, you're pitching, but you already know what's not working. So once you get the money, it's only when you can again start to work on the things that haven't been working that you knew before. So it's always this continuous thing. So I think one thing that I learned over the last years as well is you sometimes need to take time to also celebrate moments. And then we had this offsite only a couple of weeks ago, and we with the whole leader team, and everybody was discussing really tough, almost almost fighting, and you know, it was a lot of energy in the offsite. And then at one point we said, okay, let's look back where we've been, you know, a year ago, or like really like a year ago, and we had maybe, you know, 1 million customers. Now we have more than 3.5 million. We were valued at 500 million. Now we're valued at 3.5 billion. And so at the offside, everybody was kind of fighting and was, you know, pushing the company forward. But sometimes you need to go back and say, okay, that's what you have achieved, to be strong to take the next step. And I think that's very important, especially in hypergrowth.
So exactly, the milestone, making sure you've got the milestones. Because in fact, I mean, you are very steady. So last year we had Max Tayantal. I don't know whether anyone in the room was here. Max Tayantal is Valentin's co-founder. And last year he promised us that the Barcelona hub was going to open and that the US was going to be launched. And you've delivered, so congratulations, that's very good. Yeah. But you've delivered more than that. So tell us a bit about your expansion plans.
I mean, reflecting a little bit on what we've done, especially in Spain, and the Barcelona office that we've opened, where we have now around 100 people there, was really an experiment. We wanted to know if we can innovate in Europe. We can go to a new city that is between, you know, around 3 million people, and we can open an office and get the right talent. And for Barcelona, it worked. So what we're now doing, we opened an office in Vienna as well, where we have the first 15 people now. And that's now for Europe. I think the 3 offices is a good distribution.
But you're saying Vienna wasn't a random selection. You did, you know, because you are from Vienna, but that wasn't anything to do with your selection process.
No, we had a very strict selection process. And I think what we realized is that people like to work in the cities that they like to live in. And so if you look at Berlin, Berlin is the digital capital of Europe, I would say. Then you have Barcelona on the sea, not as German. So if you want to be on the sea, you can work in Barcelona. And then you have Vienna, which is also a great location. And a lot of people from Eastern Europe also like to relocate to Vienna. And so that has been very successful for us to bring the people there. But you still need to do a hard selection. So it's always about not having your own bias for any decisions that you take as an entrepreneur. So especially if you go to Vienna, and I'm from Vienna, so I have a certain bias, but we did tough research. A whole team did research, and then we decided for Vienna.
An independent research.
Kind of independent.
But it's not just the hub in Vienna that which is the fall, isn't it? It's autumn that you're thinking about that. So you've...
No, it's already started, actually.
It started?
Yeah, we have the first 15 people.
Okay.
We'd like to be 35 by the end of the year. Let's see how much talent we can find.
So it's all go.
Yeah.
And then you've got Brazil. So tell us a little bit about Brazil.
Yeah, then we have the US. I mean, in New York, we have an office with about 70 people, now going to 100. And then we have a small office in Brazil. So New York and Brazil, we have mainly for our global expansion. The New York team is really focused on the US market, a little bit also on the Brazilian market. And when you look at the company, until a couple of months ago, we were only in Europe, reaching about 300 million customers in Europe, 350 potentially. Now we've started in the US 2 months ago, so it's another 300 million market. And next year, I think by the end of the year, we'll launch in Brazil as well. So that means another 300 million market. So you go from a reach of 350 million to $1 billion in reach in only 12 months. And I think that's very exciting for the whole team, because suddenly you can accelerate much faster. And from my experience, since we've founded the company, it was always most exciting when there was acceleration, when there was either a new market, when there were new products, when the team was growing fast. That's where I myself, and I think that's true for everybody that works with us, accelerates the most in terms of his personal learning curve.
And it's we like digital banks, because digital banks is one of the areas where Europe, I'm sorry for our cousins about the other side of the pond, but Europe is one of the areas where the digital banks have done particularly well. So it is an arena where, in relation to the US, we'll talk about a bit LATAM, because obviously there are a lot of companies here who've expanded to LATAM, where we maybe have a little bit of a head start. Would you agree with that? Would you say that we've got a little bit more know-how? I mean, obviously there are companies like Chime arising in the States. Do you think we've got a little bit of an advantage point there?
So I think I've experienced that the respect, especially out of the venture capital industry, when it comes to regulation, is much bigger in the US. Because in the US also it's the same in Europe, but in the US it was, for me, I felt it much stronger. When we pitched to investors out of the US 5 years ago, no one was believing that there will ever be a challenger bank that will challenge any of the big players like Bank of America or Chase. They were just saying regulation is too complex and so on. In Europe, I felt that people were much more open because maybe also because you can start in only one market. At the same time, regulation in Europe made it favorable to go to all the markets quickly. So we started in Germany, but suddenly or quickly we realized we're not a German company, but we're actually a European company. So we started in all the markets, and now we're in 24 European markets and Switzerland.
And that was one of the points I was going to raise, that in a way the European regulators reformed earlier. So BaFin, I mean, obviously you're not in the UK, but a lot of the European regulators were more open to change than, say, an SEC, for example. So that kind of facilitated change in a way in the companies. But they now, there is an advantage. So you would say there is a head start. What about LATAM? I mean, Nubank obviously has been the new kid on the block, completely exploded. It went from 6 million to 12 million customers like in a year, $1 billion in funding. Does that make you excited? Is that one of the reasons why Brazil has kicked off now, or?
So it's definitely one of the reasons why we go to Brazil, because it's obviously cool if you see other products being successful there and you see the market is ready. So you can take out product risk, basically, to going to the markets where products, Nubank is different. It's focused more on credit products. We are focused more on the account experience. So there's a difference, but it's cool to see that people are ready to sign up for new banking products. And that was definitely one of the driving reasons for us also to choose Brazil as the next market. But I also want to be clear, we currently focus on the US, we focus on the European markets, especially the Spanish market as well. In Spain, we only, now a couple of months back, we launched a Spanish IBAN, so a Spanish account number, before you did get a German one. So we really focused on being successful in the markets that we're in, and then focusing in the US for the next, I would say, half year, and then we'll see when we start in Brazil.
And then we see. Okay, so now we're sort of getting on to the next phase, as it were. Because obviously these things have to be put in context. It's about staying power. You're still at a startup stage, even with a fabulous valuation. But if you put it into context with the Chase, as you mentioned earlier, that's a 350 billion pound organization with a kind of a more solid balance sheet. So, I mean, where do you go from here generically, not specifically? You made a very good point. You're at 3.5. Deutsche Bank's valuation is under 15 billion. That's not that far away. Like, how fast is catch-up? Will you be buying Deutsche Bank in a few years' time?
So what we really do is, and that what made us strong from the beginning, we never looked at traditional competition.
Okay.
When we founded the company, and people ask me, did you look at other banking signups? We never looked at anyone. I looked at Facebook, I looked at Spotify or the team, and from there we built our sign up, we built the product. We never even looked at other products. And I think that somehow is also true today. The beauty of founding a bank from the green field is that you can purely focus on the customer. You don't have all the heritage. You don't have different departments that want to protect revenues, that you don't have old legacy that doesn't let you innovate on the digital product. So I think that's the beauty, and that's what we work with every day. So therefore, we're in a fast track, and that made us one of the fastest growing banks around the planet today. And we very much focused on this customer. That's what also drives the team and myself, is really that we can, as a team, focus on the needs of the customers. Because we have a much, much lower cost base, so we're not always under this pressure to generate more and more revenues. I mean, obviously, revenues are important, but we have the freedom of having a profitable model with a good cost base, and so we can focus much more on the customer needs.
And it's not only just the cost base, but the way that you're set up, presumably you're better equipped to harness new technology. We had Paul Meisner talking about ML and how that's going to affect, a myriad of fields. I think to call AI and what we're doing in banking at the moment is a bit of a misnomer, but you presumably are in a better place than a lot of banks with their legacy issues.
I mean, I cannot judge for most of the old banks, but I think there's a huge opportunity, and that's also our mission. I mean, we want to be a bank that lets you live and bank your way. Yeah, we want to give you the freedom, the flexibility that you need. We want to be the most flexible bank account around the world. And we have seen that the whole world got more diverse. Everybody is living his life. Today we have many more lives than we had 100 years ago, many different parts. And I think you need to have a bank that is as flexible. And I think we're the only one that can really deliver these things based on technology.
And I mean, just because we're summing up, there isn't a clock here, so I haven't been told when to stop. But one of the things that I think that is important is culture. So if you think about the digital banks, if you think about the disruption, and I think how many here use a digital bank, an alternative digital bank to an incumbent bank? God, less than half. I was hoping like for 100%. I was hoping everyone would be using a new bank. Well, you know now, download. But what I was going to say is that I think a lot of people are disillusioned with traditional banking. Especially, well, I'm not going to say, but Spain is particularly bad on the charges that are being applied in terms of access to a lot of financing products. So, a new entrant which is going to treat the customer with civility should be able to make good penetration. But it's important to make that culture last. To begin with, it's very easy. You're not focused on profitability. You're not delivering on bottom line. It's over time that will become more an issue. But culture and the culture of an organization is very important. And in a way, you've been lauded by the VCs for your relationships with the regulators. But do you think your embedded culture from where you're coming now is also an advantage?
Definitely. I mean, the culture that we have is not a blaming culture. It's a culture of opportunity. It's a culture of diversity. I mean, we employ, as I mentioned before, about 1,500 people by the end of the year, 60 different nationalities. I mean, this is a completely international company. And that's where the creativity comes from. Completely different backgrounds, different educations. And I think that's what makes us strong and much stronger than most of the traditional players. I mean, there's this one story when I first brought my dad visited me in Berlin, and he visited our offices, and he went through the offices, and then he said, now I understand why this is completely different than a traditional bank. Just because he saw our offices and how we work. It's open space, it's a lot of glass, it's a completely different style of working, it's a lot of things on the wall. So I think this is fundamental to being creative.
Yeah. So I know.
You can't. It's a fascinating conversation.
You did not leave me in.
He's wonderful. But we have to say goodbye.
But just to say, I hope you will now all sign up to N26, one of the best possible bank accounts to have. I don't have one in the UK because I live in the UK, but I do have one outside the UK. And please, can we all thank Valentin Stalf? Thank you very much indeed.